Ever wondered if there was a way to invest without constantly checking stock prices or spending hours researching companies? What if you could set it and forget it, letting your money grow quietly in the background? That's the dream of passive investing, and for many, Acorns promises to be the answer. But is it truly a good fit for someone looking for a hands-off approach to building wealth? We're going to dive deep into Acorns, dissecting its features, fees, and overall suitability for passive investors. We'll explore how it works, what kind of portfolios it offers, and crucially, where it stands in the grand scheme of long-term financial growth. First, let's understand what passive investing truly means. In its essence, passive investing is about building a diversified portfolio that aims to mirror the overall market's performance rather than trying to beat it. This typically involves investing in low-cost index funds or exchange-traded funds, ETFs, that track broad market indexes like the S&P 500. The philosophy is simple. Over the long term, the market tends to go up, and by simply holding a broad basket of investments, you participate in that growth. It minimizes the need for active management, frequent trading, and constant decision-making, hence the passive aspect. Now, where does Acorns fit into this picture? Acorns is a robo-advisor, an automated investment platform that manages your money for you based on your financial goals and risk tolerance. Its most famous feature, and often the entry point for many users, is roundups. This ingenious feature links to your debit or credit cards and rounds up your everyday purchases to the nearest dollar, investing that spare change into your Acorns account. Bought a coffee for $3.25? Acorns rounds it up to $4 and invests the 75 cents difference. This frictionless saving mechanism is a powerful habit builder, making investing feel less like a chore and more like a seamless part of your daily life. Beyond roundups, Acorns also allows for recurring investments, where you can set up automatic daily, weekly, or monthly contributions of a fixed amount. This is a crucial element for truly passive investing, as consistent contributions, combined with the power of compounding, are the bedrock of long-term wealth accumulation. The more regularly you contribute, the more you benefit from dollar-cost averaging, which is the practice of investing a fixed amount of money at regular intervals, regardless of market fluctuations. This strategy helps to reduce the impact of volatility, as you buy more shares when prices are low and fewer when prices are high, averaging out your cost over time. So, how does Acorns actually invest your money? Acorns builds diversified portfolios primarily composed of low-cost exchange-traded funds, ETFs. When you sign up, Acorns asks you a series of questions about your financial goals, time horizon, income, and risk tolerance. Based on your answers, it recommends one of its core portfolios, ranging from conservative, more bonds, less stocks, to aggressive, more stocks, less bonds. These portfolios are designed by experts and typically include a mix of large-cap domestic stocks, international stocks, mid-cap stocks, small-cap stocks, and bonds. For example, an aggressive portfolio might allocate a significant percentage to Vanguard S&P 500 VOO and iShares Core MSCI International Stock IXUS. This diversification is key to passive investing, as it spreads your risk across various asset classes and geographies, reducing the impact of any single investment performing poorly. One of the significant advantages of a robo-advisor like Acorns for passive investing is its automatic rebalancing feature. As market conditions change, the original allocation of your portfolio might drift. For instance, if stocks have a particularly good run, your portfolio might become stock-heavy compared to your initial target. Acorns automatically rebalances your portfolio, selling off some of the overperforming assets and buying more of the underperforming ones to bring your portfolio back in line with your chosen allocation. This crucial step, which can be tedious and time-consuming for individual investors, is handled entirely by the platform, reinforcing the passive nature of the investment. Acorns generally rebalances when a holding fluctuates 5% above or below its target allocation, or if you change your portfolio settings. Acorns also offers Acorns Later, which are tax-advantaged individual retirement accounts, IRAs, including traditional, Roth, and SEP IRAs. For passive investing, utilizing these tax-advantaged accounts is highly beneficial. Contributions to a traditional IRA might be tax-deductible, and your investments grow tax-deferred until retirement. Roth IRAs, on the other hand, involve after-tax contributions, but qualified withdrawals in retirement are entirely tax-free. Acorns also has Acorns Early, an investment account for kids, which can be a great way to start passive investing for a child's future. Beyond the core investing features, Acorns also provides educational content through Acorns Learn, offering videos and articles on various financial topics, helping users improve their financial literacy. They also have Acorns Earn, a program where you can get bonus investments by shopping at participating retailers, adding another layer to the passive accumulation of wealth. Now, let's address the elephant in the room: fees. For passive investing, especially over the long term, fees can significantly erode your returns. Acorns charges a flat monthly fee, which varies depending on the subscription tier. As of recent information, these tiers typically range from $3 to $9 per month. For very small balances, this flat fee can translate to a relatively high percentage of your assets under management. For example, if you have $100 invested and pay a $3 monthly fee, that's a 3% annual fee, which is quite steep. However, as your balance grows, the percentage cost of the flat fee decreases. For someone with a balance of $10,000, a $3 monthly fee, $36 annually, represents a mere 0.36% of their assets, which is competitive with many robo-advisors. This means Acorns becomes more cost-effective as your investment grows. It's important to consider this sliding scale when evaluating if Acorns is good for you. With that said, thanks for watching, and until next time.